Gold and silver have been treasured for thousands of years, not just for their beauty, but also as symbols of wealth and security. Today, these precious metals are more than just relics of the past. They're strategic investments that can play a crucial role in modern portfolios. But why exactly are gold and silver considered good investments today, especially compared to fiat currency? Let's dive in. To truly understand the value of gold and silver, we need to compare their performance against fiat currencies. Historically, fiat currencies, those not backed by a physical commodity like gold, have consistently lost value over time due to inflation and other economic factors. Take, for instance, the US dollar. Since the Federal Reserve was established in 1913, the dollar has lost over 95% of its purchasing power. What a dollar could buy you in 1913 now requires more than $25 today. Contrast this with gold and silver, which have not only maintained their value, but have often appreciated significantly during periods of economic turmoil. For example, in 1971, when the US abandoned the gold standard, an ounce of gold was worth about $35. Today, that same ounce of gold is worth nearly $2,400, a clear indication of how gold has protected wealth over the decades. Silver, while more volatile than gold, has also outperformed fiat currencies in the long term. In 1971, silver was around $1.50 per ounce. Today, it trades at approximately $24 per ounce. This significant increase demonstrates silver's resilience against the devaluation of fiat money. As of today, the price of gold hovers around $2,400 per ounce, and silver is trading at approximately $24 per ounce. Meanwhile, fiat currencies continue to lose value due to inflation. The US dollar, for example, has seen significant depreciation in recent years as the Federal Reserve has expanded the money supply in response to economic crisis. Several factors are driving the ongoing devaluation of fiat currencies. Central banks around the world have adopted aggressive monetary policies, such as quantitative easing and near-zero interest rates, to stimulate their economies. While these measures can boost short-term economic activity, they also erode the value of fiat money, leading to higher prices for goods and services, essentially inflation. In contrast, gold and silver have remained stable or even appreciated during these times. This stability is one of the key reasons why investors turn to these metals when confidence in fiat currencies wanes. As history has shown, when paper money loses its value, gold and silver shine as reliable stores of wealth. Gold and silver are not just safe havens in times of crisis, they are also effective hedges against inflation. When fiat currencies lose their purchasing power, as they inevitably do, gold and silver tend to rise in value. This inverse relationship makes these metals essential components of any strategy aimed at preserving wealth over the long term. We've seen extreme cases of fiat currency devaluation throughout history. Take Zimbabwe in the early 2000s, where hyperinflation reached a staggering 89.7 sextillion% per month. In these scenarios, gold and silver provided a lifeline, holding their value while the local currency became worthless. Even in more stable economies, like the US, we've seen inflation eat away at savings, but gold and silver have continued to protect purchasing power. Today, as inflation rates rise globally, whether in developed economies like the US and Europe or emerging markets, gold and silver are increasingly being viewed as necessary hedges. They offer protection not just against inflation, but also against the broader uncertainties that come with geopolitical tensions and economic instability. Another compelling reason to invest in gold and silver is their role in diversification. While fiat currencies are prone to devaluation, gold and silver have demonstrated long-term value retention. By including these metals in your portfolio, you create a buffer against the risks associated with currency depreciation. Studies have shown that portfolios diversified with gold and silver often perform better during periods of economic uncertainty. For example, during the 1970s, when the US faced high inflation and economic stagnation, gold prices soared, offering investors protection from the declining value of the dollar. In contrast, those heavily invested in fiat currencies saw their real purchasing power diminish. Investing in gold and silver has also become more accessible than ever. Whether you prefer physical bullion, coins, ETFs, or mining stocks, there are numerous ways to gain exposure to these metals. This accessibility is critical in today's market, where the value of fiat currencies can be unpredictable. Physical gold and silver offer the security of tangible assets, which can be crucial when fiat currencies face devaluation. On the other hand, ETFs provide a convenient way to invest in these metals without worrying about storage, and they can be easily traded, offering liquidity similar to that of fiat currencies. Both options ensure that you can protect your wealth regardless of what happens to the value of paper money. Gold and silver are also seen as a hedge against uncertainty. In times of geopolitical instability, like the ongoing conflicts in various parts of the world, investors flock to these metals as a safe store of value. The recent fluctuations in global markets only reinforce this trend, highlighting the importance of having a portion of one's portfolio in assets that aren't directly tied to the performance of the stock market or a specific currency. During major economic crises, both gold and silver have proven to be resilient. For instance, during the COVID-19 pandemic, while many assets suffered heavy losses, gold hit an all-time high of over $2,000 per ounce. Silver also saw significant gains as investors sought alternatives to traditional investments. Another compelling reason to invest in gold and silver is their role in diversification. Gold and silver have low or negative correlations with other asset classes like stocks and bonds, meaning they often perform well when other investments don't. This makes them an excellent addition to a well-balanced portfolio. Studies show that portfolios with a mix of stocks, bonds, and a small percentage of gold and silver tend to perform better in the long run, especially during periods of market volatility. In conclusion, gold and silver remain valuable investments in today's uncertain economic landscape, especially when compared to fiat currencies. Their historical resilience, ability to hedge against inflation and uncertainty, and role in diversification make them solid choices for any investor looking to safeguard their wealth. Unlike fiat currencies, which can lose value due to inflation and poor economic policies, gold and silver have stood the test of time. If you found this video helpful, don't forget to hit the like button and subscribe for more insights on smart investing strategies. What are your thoughts on gold and silver versus fiat currency? Let us know in the comments below.